Okay, a fast, sharp follow through move for the stock market this week. This was not a sit around, digest, and sort of chop things out. This was a full on squeeze and follow through to last week's rally. So, we are going to talk about the changing of the guards kind of going on this week and what we want to be paying attention to now going ahead, going into earnings season. And there is definitely some movement here that we need to be paying attention to. So we're going to talk about that. Thanks for joining. Hope you're doing well. This is your favorite Stock Market Weekly show where we break down all of the moves happening across financial markets. Our sponsor of this show is Investors Business Daily. They are running a sale this weekend, 75% off their MarketSurge. It's, I think, $14.95 for 14 days. You definitely want to take advantage of it. See if MarketSurge is a good fit. This is that time. If it's not for you, then you certainly just cancel. But it is a powerful charting platform. Definitely recommend you check it out. We've got links in the description of our show. Now, this is front and center here. Everything we're going to talk about really revolves around the de-escalation event that took place on Tuesday. And that's how the market is looking at the events that have unfolded here geopolitically between the US and Iran. Whether or not the coast is clear here, obviously there's still lots of messy kind of signals that we're seeing. And, you know, the strait is not entirely open. Are they charging tolls? Like, all of these things are still uncertain, but I think the market at least is saying that there is a de-escalation event, and at least if we can kind of talk things out and figure things out and not escalate this war, then we're happy. And so this was really the cause of the big spike this week was the news here of that 2-week ceasefire. This is the weekly chart of the Nasdaq 100, and what a difference a week makes, because this is now a follow-through week, and this chart is suddenly repairing itself quite nicely. I was very skeptical last week. I wasn't outright doomsbearing on this market, but I was certainly skeptical of wanting to put on too much risk. And I wanted to see follow through. It talked about a follow through week would be an improvement, would be something that would help me change my opinion. And I am starting to change my opinion because, well, price is truth. And we are seeing price rally higher here this week. Now, I think one of the things that a lot of folks are going to be pointing at is this large looming sort of open gap here in the market. So this was on the heels of the ceasefire that happened on Tuesday. And we saw this nice gap up, or I guess Wednesday session here with the nice gap up. And this is a open gap right now. And so all the technicians out there will say, you know, gaps must get filled. They must get tested. Well, not everything has to, because I'm going to zoom forward here. If we rewind the clock, this is May of 2025 coming out of the tariffs. And look at this gap here. That was north of 2%. It was a bigger than a 2% move on this gap. We have not yet filled it. Now, maybe the market will get there eventually with some big bear market, maybe one that we're currently going to still see. But not all gaps do get filled. In fact, you can have these sort of breakaway gaps that create this strong trend. We also had another smaller gap back here that didn't get filled in the QQQ ETF. Now, another thing, this is all the bullish evidence I want to start to present us with here. This is semiconductors. And this, again, I posted this on social, not on my bingo card this week. This is semiconductors making all-time highs and doing it with urgency. This speaks to the offsides positioning. This is everyone now that had a lot of cash, that had protection, that didn't want to deal with all of the noise here on the geopolitical front, now has to make a decision to get back invested into this market. Semiconductors are the leadership group, and they are demonstrating that right now. This is a very tough chase. 22% in 8 days. That is a V-shaped move. This is a V-shaped rally. Everyone wanted to see a V-shaped move. We're getting it. It's just not at the deep discounts I think many wanted. We were all hoping that we could get semis down here in the low to mid 300s. That's what I posted publicly. I wanted to buy semiconductors. I just wanted them at a cheaper price. So it didn't happen. We got a more shallow pullback, still a 15% pullback, and we're getting a V-shaped move here in a very important sort of sector of the market. So these are all the bullish developments that I think we need to be taking note of this week. I think, if you're very bearish on this market, you've got to at least upgrade your status a little bit to say, whoa, we've got a follow through week here. Maybe it's just short covering. Maybe it's temporary. Obviously, there's that chance. But right now, the market is sending a pretty clear message. We're going to look at some more things a little bit later in this episode. Now, some of the more modest things that aren't so exciting. 10-year treasuries. 10-year treasury yields are still kind of bull flagging out, so to speak. 4.3%. They didn't give up too much this week. So we didn't see treasury yields completely reverse and start to head back down to, say, the 4% figure. Crude oil down sharply, some 10% plus. And notably, though, we're still kind of holding this bullish sort of overall uptrend structure that we've been in. Maybe that'll start to break down if this deal and, we can start to have a more firm resolution. But for now, oil remains fairly bid. Treasuries remain fairly bid. So these are sort of the, clouds that we can still look at to say, okay, if this market is for real, we want to see these things start to give up. This is where, again, a week that not everything was treated equally. Stock selection matters more than ever in 2026. This was the software ETF IGV, and it made new lows this week on volume. So into Friday, into the close, 3 days down, they sold this gap up aggressively, and we proceeded to make new lows. So this is where stock selection, again, matters to be a broken record. Here's the performance this week. 4.5% up for the Qs, 4% for the Russell, 3% for the SPY. USO ETF down almost 10%. SPX, we already looked at it, basically, up and to the right throughout the whole week. We have the VIX, which has collapsed from a brief 30 down to 20. So we lost about 10 points here in the VIX, still staying, a little bit elevated, but well off of the highs here. US dollar starting to roll over a bit here into the end of the week. And 10-year treasuries, we already looked at 432, still staying relatively sticky. Sector performance this week, everything was a winner except for energy. XLE, of course, taking it the hardest, which makes sense. Industry breadth. So this is something I'm going to start to present some more views here. This is just a brief snippet, and this gets us a little too into the weeds for this section of the video. But if we look at industries underneath the hood, this is on the week. This is, basically what you're seeing: electrical equipment, semiconductors, machinery, construction materials, building products, all very industrial hardware, sort of real world kind of, rotation happening. If you look on the downside, you are going to see, you have healthcare tech. I don't know what the big story was on that. Services, oil and gas. So you're seeing, again, just a more granular view of where money was rotating this week into the strong and weak sectors of the market. Now, again, what a difference a week makes. This is our smart trend filter. So this is measuring breadth across individual sectors in the market, kind of price and volume based. And then on a daily time frame, we have effectively every single sector here, except for consumer staples, except for energy, that are in a bullish state now. So they have, done some healing. They have repaired themselves. They have worked off those, short-term downtrends, and we are starting to trend higher. 52-week highs and lows, getting a bit of a resurgence here. 140, that's the highest number. This does not include Friday's data, but we're starting to see more pickup and activity under the hood. And the percentage of S&P 500 stocks above a 20 SMA oversold to overbought in 2 weeks' time. Fear plummeting, put to call ratio moving down to, again, oversold metrics, which basically means that a lot of that insurance that folks were owning, they're throwing it away now. And so there's a lot less fear right there now going into the weekend. And here's Bitcoin rising from the dead, so to speak. It hasn't quite resolved some of these big kind of, this range, this sideways range it's been. We've got basically 75K, 73K. We're testing this here. But it's got some energy. It's got some strength. It's starting to hook up here, and we'll see if we can get a nice breakout and maybe a move back into the 80s in the coming weeks if this rally can stick. Now, next week, we have a pretty light week of econ data, so not a whole lot that we're going to be looking at. We got PPI on Tuesday, but really it's earnings season. Earnings season is about to kick off. I mean, it technically already kicked off, but we're going to start to get more banks, and we have, for tech at least, Netflix on Thursday. So that one will be an interesting one, and we'll start to get a read on corporate earnings, which I think this market is going to want to see now that it has sort of rebalanced itself back into this old 5-6 month range. How are earnings? How are companies? Where are we guiding? What does that landscape look like? So let's look at some charts. All right, we're back. We've got the S&P 500. This is the cash settled market, Warden TC 2000. This is the weekly chart. So weekly chart here, you can see again, strong follow through for the S&P 500. At the close, we are approximately 8%. Let's round a little bit. We're 8% off of the lows that we saw just 2 weeks ago. And we're really back into this big chop area here. This area that held is kind of support for a few months, really, all year long until we finally broke down. We're checking back into it here. Now, coming into this week, in the last few weeks, my base case that I think I've made pretty clear was volatile, sideways, for longer than most people want. Now, my bias was more of that bearish tilt as we were sort of grinding down. We talked about everybody being pretty hedged at all times, which was giving the market a very difficult time to really just see a capitulation of selling because of the overhedged nature of the market. But sort of figured, we would be in sort of this figure it out phase, volatile and sideways for longer. I actually don't think a lot of that view has to change so much, but I do think that, we may have seen the lows. We may have seen the lows here at 6,300, and we're going to chop around between, call it 6,000 and 7,000 for the next couple of months. Like, that seems entirely plausible to me. We are, of course, in the short term, pretty stretched to the upside. We've just seen a 9%, 8% move off of the lows in less than 2 weeks. So it is a very difficult chase environment, but here we are pretty much back into the messiness of this range. We're below highs. We're back where, we just found lots of sideways trading. And so we're going into earnings season. I think the market is going to start to care about Fed. Maybe they can start to look past the situation with Iran. If we flare up again, then, we have issues, of course. But earnings season and the Fed, maybe we start to circle our attention to there with a little bit of inflation sprinkled in. I think that's what the market is going to be chewing on for the next week or two, provided we're sort of status quo on the geopolitical side. Here's the Nasdaq 100. We sort of already covered that. We had roughly a 12.65% drawdown. Just double check my numbers there. Yeah, that's about right. We've got this big open gap. Feels like, again, not that we have to fill all gaps, because the gaps from 2025 never got filled, or at least not yet. I would say it's pretty likely if the bet is volatile and sideways and choppy, there's probably going to be some excuse to get us back down here at 590 to fill that gap. We probably need to put some type of higher low in and check back here at some point, but that point is not yet. Again, semiconductors is providing a chase for the market. This is what the weekly chart of semis looks like, and this is a breakout week to all-time highs. While sentiment is going to be so discouraged to want to chase it or buy into this after this sharp of a move. So there's some interesting dynamics here, which is why, again, I think you have to flip your framing a little bit and not get too bogged down into the headlines. You need to start to look, at price action, at the sharp move that it's telling us this week. And we're going to look at some of our work here in just a little bit. So that's the market as a whole. You can see that the VIX did come down. We're sub 20, so that's good to see. Gold getting, a third week up in a row, so kind of stabilizing a little bit here. We already sort of talked about oil as it pulls back, but really hasn't broken trend yet. It's still hanging pretty, bid and elevated right now. Silver also kind of on the mend, recuperating a little bit. Here's high yield. So this is the high yield credit, which, remember, credit is private credit, some cracks there. We've got some issues, redemptions. It's a spot to watch, and it did recover pretty sharply at the beginning of this week. It rolled over here a little bit, just using HYG as a proxy. So we do want to pay attention to this, but generally speaking, it is heading up in the right direction. You can look at financials, which are going to be reporting earnings next week. They're starting to break this downtrend that they were in as well. So there's lots of repair that is happening right now. Once again, like we talked about at the top, this is IGV. This is the software ETF making new 2.5-year lows, doing it on some pretty heavy volume right now. A lot of the, again, old heavyweights here, Oracle, starting to make new lows. Microsoft still looking very weak right now. Palantir hammering, but briefly breaking the recent lows here in February. So there's definitely some, choice. Michelle Steele yesterday, we were talking about space. Space is the UFO ETF. Lots of strength here, up 30 some odd % this year, breaking out from a nice sideways range. We have been trading a lot of the individual stocks in our momentum Quant Rockets strategy, and this continues to work. Obviously, SpaceX is the big magnifying glass on this area, but this goes to show that there are still pockets here that are working. And let's switch over to some of our work right now and show you what we were doing this week. So here is, pull this up. Here is our dashboard for our Rockets and our Galahad trading systems. So this is updated as of Friday. Momentum had a good day on Friday. Galahad was pretty much in line with the market. This is our swing trading environment sort of outlook. And let me pull up a better view here, which will be up on a better basis. So this should be interesting to folks that are swing trading or looking over, stocks over the next 30 days. So it's color coded: green, yellow, red. I think you can kind of figure out what the symbolism is there. But we had a very fast upgrade cycle this week. On Tuesday, so this was prior to the announcement, we actually got an upgrade on our health of the market environment. So we moved from our bearish state to our mixed state. And we're not using this as a buy or sell for the market. We're using this as a risk management overlay to understand how aggressive we want to be looking for trade setups, how aggressive we want to be putting capital to work in the market as swing traders. So this is kind of a top level. Think of it as like a, just a way to measure risk in your portfolio. And then come Thursday, we had a move up and signal to the bullish state. So right now we are in risk-taking mode for swing trading. Market is stretched right now, so you do have to kind of hold both thoughts in your head that you might be able to get some better entries in the next couple of days if you want to wait and pick your spots. But generally speaking, this is a market that just V-shaped off of its lows. And we see it in the number of stocks hitting our model. The breadth was explosive this week for momentum. It does coincide and look like when markets make major lows. It's not a claim that we're going to make a low, that the low is in for sure. We just know that with the evidence that we see with the V shapes out there in the momentum basket that we specifically track, we have the ingredients for some type of sustained, low that we can trade against at least. And so this model, I go back to here, is what we're seeing here. We're in the excellent swing trading environment once again. I know that can sound funny, but this is how markets move in very sharp, kind of volatile areas. So that's our current disposition here, and we are finding lots of opportunity underneath the hood, which I'll take you through in just a second. Our long-term kind of slower horse Galahad all-weather portfolio just doing its thing. It's still pretty risk-off right now. It divested from QQQs a few weeks ago, and it is not taking the bait yet on getting back involved into QQQ. It needs more proof. This model up here, looking at the next few weeks. This model here, looking at the next few months. So our slower model is not yet, kind of coming in and saying, yeah, let's take risk. That's why time frame matters so much, especially when you get into those pullbacks and volatility. We got 4 new buys for tomorrow, but I want to show you, I have another screen here somewhere. Yeah, I want to show you my watch list here. I'm going to show you 4 names on the watch list. There are a ton of stocks showing up right now in our momentum universe. So if you're a swing trader looking for momentum, you got to come check out Rockets, take a trial and see if it's right for you. Flex is one I've talked about many, many times now, like a broken record. I just think it was so interesting because you had a very, sideways orderly range that you could trade against for a breakout. It wasn't stretched. It wasn't up, a gazillion percent coming into this. So you had plenty of time. I talked about it even when we were down on this trade for multiple days. And now you can see this is breaking out nicely, hitting a target, and then going to our second target. Very stretched in the short term, but just kind of showing this name once again. TTMI. So this is one here that we got into on Friday morning. Breakout name here going into the weekend, breaking out from this range. So it's pretty actionable. This was a Thursday night signal. We bought it on the open at 109.18. Our first target is up here at 139. Our approximate stop is here. Again, this is a very, kind of technology, but hardware driven stock. Sats, I've talked about a few times. This is effectively in the UFO bucket of space. Believe it's a constituent there. But this one, again, I'm trying to show things that are not too extended, that are still relatively actionable. It was a little bit of a lackluster this week, but it got its act together on Friday, had a nice close, and you could start to lift out of this base here. And finally, MP. This is a brand new signal for Monday. So this is a new trade that we're going to be getting into on Monday. This one here has been in a pretty, substantial drawdown, and it's starting to make the corner here, starting to, lift itself up, get back above these prior lows. This is what we'd call kind of an early momentum transition, kind of early momentum signal up. This is not a classic breakout by any means. We're not taking out any, cluster of highs here. We're very much kind of, getting back off of the lows and starting to turn things around. So MP, basic materials name in kind of the mining space, is something that, we could look at here next week as a potential swing opportunity. So that's it. That's what I've got for this week. I think you had to act fast, not be too sort of opinionated on the news flow. There is definitely improvements out there in the state of the market. There's a bit of a chase right now. There's some FOMO. I would say resist the FOMO, look for quality, actionable setups, have a process. These are all things that we kind of preach here on a week-to-week basis. We've got trading systems in the description of this show. If you need more structure, we can help with that. And don't forget IBD and their MarketSurge offer this weekend as well. 14 days, $14.95. That's all I got. Thank you so much for tuning in. As always, every Friday, don't forget to subscribe if you enjoy the episode. Thanks so much for tuning in.